Very much, Sean. Good afternoon, everyone. Welcome to our second part of our um, Forex investing and trading, the currency trading. As last week, we noticed we looked at the foundation, look at more of an introduction to the Forex and currency investing and what it is, what pairs are made of, and why we should even be interested in investing and trading in Forex and currencies. And so this week, we're going to kind of dive in deep and go inside actually the trading. And I'm going to introduce some strategies that we could use. And it will, even if you don't trade Forex, you could use it as an advantage to maybe trading in your gold investing or precious metals, for instance, in crude oil, because all the markets are really related to each other. And that has been my emphasis, to understand the markets as a whole. So even if you don't want to open a Forex account, then you can use ETFs or you can do futures, or you can do options on ETFs. So today, basically, we're going to emphasize more on the trading side and the application of what we learned last week. So with that in mind, again, because we're talking about trading, the rule number one, we're going to talk a little bit about that, because without, again, knowing yourself, what kind of a trader you are not going to have success as in any aspect of all the aspect of the investing and trading that we do in any market. So that we will talk a little bit about that. And without doing that, again, the Forex trading will not be profitable. The second thing, I'm gonna go kind of outside the box, talk about the sentiment and whether the Forex can we use tools to find out if there is any way we have advantage of knowing what the crowd is doing. Then we will talk about the best time to trade, this time of the day, because remember last week we said Forex is a 24-hour a day instrument that it trades. So we have access to them. But if you have the best times, but what are we going to do? What time frame we use? Do we want to do it on a daily basis? Do we use 5 minutes? Do we use hourly? So we will discuss that as well. Then we will talk about some of the strategies that I use they've been successful. Again, with thousands of indicators out there, thousands of ideas out there, I've kind of narrowed down to few. So hopefully they will be beneficial, and you can take advantage of them and use them immediately. And I also mentioned something about some of the best brokers in the United States and around the world. As you know, Forex actually is very popular, let's say in Asia, especially in Australia, and also in Europe, again, especially in London. So there's a lot of brokers overseas, but there are few in the United States, which I will review. The last but not least, briefly, again, I go back to the beginning, some of the successful traders' traits that it will be helpful to have, and what makes it a successful trader. All right, let's start with this. You've seen this before, and you know how I believe in the psychology and the emotional side of the trading. And Jesse Livermore, some people say the greatest trader ever, says that a man must know himself thoroughly if he's going to make a good job out of trading. And I truly believe in that. And again, the trading is almost like a mirror, and it brings out the best and also the worst in you. So with that in mind, one of the reasons we do emphasize that, because I believe in, especially in trading, less so in investing, it is the psychology, and about 50% or more depends on the psychology and your emotional aspect, your mindset. There's 30% is the money management, and that is the emphasis should be on that. It's the risk management. It's about your position sizing, about the position management. And only 20% also is about the trading system. So with the trading system, a lot of times what we do, we study a lot about the strategies. We know everything about technical analysis, and we forget about the other 80%. Going back to, we were just discussing earlier, sometimes it's nice to go fishing or playing golf. And Jesse Livermore, again, he has a great quote. It says, there's a time to go long, there's a time to go short, and a time to go fishing. And that's an attribute is very difficult for a lot of traders to handle, is being patient and knowing when to take some time off and be on the sideline. And that's very important. And it goes back again, this is from New Traders Youth, they look at, again, risk management psychology. So there is no use if you don't have a risk management. You do have the trading psychology, you do have the winning system, the great strategies, but not a very good money management. Well, that's when your account blows up. On the other hand, you could have a good risk management, a good psychology, but do not know what kind of a system you should do, what kind of strategies, then you really don't have an edge. And again, if you have the risk management, the strategy, but you don't have the psychology, then you don't have a discipline, and that career will not last long. So the main thing is you got to have a happy balance, and that's how it creates a profitable trading career. So I'll share some of my own rules when I got into business, and I came out with the idea of why am I doing the trading. And for me, it was I wanted to know, why am I taking an action, whatever I'm doing? And if I am, I know why, what is my bias, what is the reason for that, then I want to know what vehicles and what action I'm going to take and how I'm going to do that. And then it's the timing of it. When am I going to take that action? Am I going to do it this minute? Am I going to wait for confirmations? So basically, in order, especially in Forex trading, if you want to have a successful trade, and also in the futures trading, the same thing is you want to find a trend. Especially in Forex, the trend is very important. The trend of the market. You want to know what is your bias. Do you feel positive? You think the markets are going up? Are you going to go on that ride? Once you find that trend, then we have to find the signals and the indicators that have worked well for us. And that's why we talk about the strategies. So once you got that, then you have to wait for the confirmation, knowing that this is the perfect time to get in. There's not almost perfect time. There's never a perfect time, but it's a most profitable time to get in. So basically, I'll just give you an example. Let's say you have the indicators working, your stochastic is telling you a MACD you have, and then you get the right candlesticks, for instance, and the candlestick tells you, well, this is the right time, there's a confirmation, and that's the trigger, and you get in. So this is a good trading rule. Now, with the Forex, just remember, the Forex is different than the stock market. So a lot of times when you read about Forex trading, about the books, we watch some YouTube, and they talk about the indicators, they talk about the strategies. Sometimes it's written or done by the stock traders and investors, or even futures traders. So there is a difference. Remember, with the Forex, you have pairs. There's two sides. So with stocks, well, it's a market of the stocks. There is this central place. When we have pairs, for every long, there's a short, and they're constantly battling. So that's why a lot of indicators, they really don't work well with the Forex trading. So be aware of that. And it goes back to the trading again. One of the best thing I've learned, not only you want to build a good habit, start trading, start doing as much as possible, especially if you have to in the beginning, do the paper trading, simulated, to build not only good habits, but understand your mistakes and get rid of the bad habits that you have. So if I learn to not lose as much money, for instance, to manage my risk, it's as good as I'm making the money. So we want to reduce those things that hinder us. So Just remember that. So talking about that, one of the rules I want you to remember on the money management, again, understanding the average true range. So with the ATR, we've talked about hedging your account. When is the best time to get out of your positions? What exit strategies that you should use, and what positioning you should use. So one thing I would tell you as far as the money management in the Forex is, and you've seen it, I use it with my stock trading, is you can be mechanical, or let's say you want to know when to get in and when to get out, but how much money do I invest? One of the things is you want to use the average true range. The reason is average true range looks at the volatility of that individual asset. And I will stick with the past 14 days. So the reason I say that, each pair, when you use the Forex, for instance, they're not the same. It's the same as, you don't compare a biotech stock with like a utility stock. So they all behave differently. So you cannot say, oh, my stop loss, for instance, we use that, and it's like, again, it's 10 pips. Well, when you use New Zealand, when you use a Kiwi, the New Zealand dollar, or like a British pound, New Zealand dollar, is not the same as like a US yen, a Japanese yen. So each one, or the British pound, euro, the volatilities are very different. So what you have to do, your risk management should be based on the volatility of your underlying assets. And one of the best tools is the average true range. So I've used this example before. So when we talk about money management, a simple money management will be, if you recall in the past, what we've talked about, usually it's about 2% of your capital per trade. So what happens, for instance, if you have a $10,000 account, then you cannot lose more than $200 on that trade. So based on that, you will ask, well, okay, it's $200. So what kind of amount of risk on pips I have to take? So if each pip is $10, then this 20 pips. That's my risk. If you want to do 2 contracts for that trade, then you have to cut it down to 10 pips. So as you know, as your account gets larger, and in your situation like 100 to 250,000 or more, then my risk capital management goes to 1%. So the smaller the account, you can go with 2%. The larger the account, actually, I go, let's say, if I have a $250,000 account, then I will use 2,500 per trade. One of the things about, again, the risk management with the Forex, which is different than the stocks, is you cannot say, okay, I'm doing euro dollar, basically that I am bearish about dollar, so I'm going to trade this, and then you're going to do British pound dollar, the same thing, you're bearish against dollar, and then you do Aussie dollar and US dollar, you're bearish. Well, there are 3 different trades, but they have the same goal. So what you have to be very careful, and that's why the Forex is not like stocks. If you're trading with the same bias, with the same vehicle, because all of them are the major pairs, it's the US dollar pairs, then your risk is going to be $200 for total. It's not going to be, each contract is going to be 2%. So I hope it's clear. So basically what you want to do is make sure you do independent kind of trade. So if I'm doing euro dollar, I might do British pound yen, for instance, or Aussie dollar and New Zealand dollar, or something like, which have no relationship. That becomes independent trade. So just be watchful. Then that's what, again, it's a little different when you do, for instance, Forex compared to stocks and other commodities. So I just want to give you an example. You know, all your charting tools, they do have, like, this is Euro USD. It's a chart, and then you have the indicator, the average true range. I will use that 14. You can go to FinViz. FinViz gives you the past 14 days average true range. So you can see this has been, this is on a daily basis. So you can see how many, you know, in this case is at 59, I believe, is that it has been either been up or down that amount. So that's what you expect. So if I'm putting in a stop, usually I would recommend like 1.5 times this. So you give it a little time, and that could be your target. If you want to leave a quarter of your position or half of your position, this is one way of actually having money management based on position sizing, but also your stop losses. So you have access to these. The second part we're going to talk about is the sentiment. So one of the things about euro, I mean, not euro, the currencies and the Forex is that strength, as you know, it's a most liquid um, uh, as far as markets in the capital market. The $6.2 trillion, $6.3 trillion is the volume daily. And there's a lot of banks involved in this. So again, because we don't have this centralized vehicle, an exchange, what happens, a lot of banks have a lot of power. And I just thought this was interesting that, you know, a couple of years ago, what happened, EU fined the 5 top banks and for $1.2 billion for FX rigging. So what they were doing, they were manipulating the spot, the cash Forex, because one of the things they can see, for instance, I, as a retail trader, where are my stops? Where are my, you know, they know what is the bias. So basically, based on that, they would look at how many people they see the retail, 80% of them are going long on euro. They will push it up, and then they will come and they will just sell a lot of it, and they start shorting. And that's how they were manipulating. And I think Citibank paid the highest, 330 million. But when you think about these numbers, they are nothing when you are basically trading trillions. And so this was nothing. It was a slap on the hand. But the reason I want to bring this is that they actually see where the activity is. And that's what we want to see. Are there any services that we can see that what is the sentiment? What are the majority of times the retails, Forex traders, for instance, or all the traders, where is that sentiment? So there's 2 services. One is the IG, which is the largest really Forex trader. They're very big in Australia and in England and Europe. They're the largest. Fortunately, they have come to the United States, so they do have IG US. So one of the services that they use, they have something called IG Client Sentiment Report. This is just hot off the oven, as they say. It's just happened a few hours ago. So by looking at this, you can see all the clients that they have, for instance, in the retail, which is the retail side, what is their bias? Now this is silver. You can see there's a lot of long on silver. So this long, and then, you know, we go all the way. So it has a lot of, you can see there's a lot of currencies, so pairs. And by looking at this, you can see where is that sentiment of the retail investors. Now, one of the things you have to understand, and I want to explain that, with silver, this by itself doesn't mean that you have to go because it's everybody's long, we got to go short it. It is very difficult to manipulate the silver market, the gold market. So there could be legit reasons. It's mostly in most liquid or the majors that there are trillions of dollars are being traded every day, especially by the banks. That's where the advantage is. So what we want to do, we want to go outside the box and say, okay, they can see, for instance, the banks see, well, there's activity. As you can see here is like Aussie yen, but mostly you want to see which markets are the most liquid. and the majors are the one, anything with US dollar, especially with the euro dollar, euro yen, euro Swiss, and dollar Swissy, the British pound and dollar. So we look at that, and that's the one. And I'm going to be using purely just euro USD just for simplicity with all of my presentation. You can see that they look at it. So here's the trend. You see that the retail was short, and then now the bias is up. So they've been buying and buying as the markets have been going down. Now, as soon as the direction of they are becoming more and more negative, the markets are going up. And this is where you can see now there are more short. There's a majority of retail investors are short euro, and few of them, so about 67% are short euro. Now, what happens? This is on a daily basis. So does that mean that the banks are gonna try to corner these retailers and start, maybe this is a time to buy euro? One thing is, when we will talk about time frame, majority of this, if I call manipulation or this bank control, happens on scalpers and a very short-term day traders. Investors or the position side or swing traders, usually because they have a long term, or at least like they have days, and their emotional side is more under control, they don't fall for this, or they're not part of the target for the banks. Is usually what it is the people who are scalping. They're in it for 5 minutes, they're in it for 10 minutes. They're going to become millionaire by multiple trading every day. So they catch them on the emotional side. So this just an idea. So on a, just as I said, it's the sentiment. We will watch it, but we are going to talk about strategy. We're going to look at the chart. But this is one way of knowing where is the sentiment. So one of the ways to go around that, if you can see, well, if the banks are going to use this as a vehicle, do I want to go against it and fade it? Well, not really, because as I mentioned, you want to make sure the direction has, the trend has already started. So you would not, for instance, because this is a top, you just don't say, well, all the longs are there, I'm going to go ahead and short it, for instance, or because everybody, now that they are shorting, not the direction, that's when you start buying if you wanted to. So it's a delayed, but what it happens though, again, the banks see these things, and that's what they do. They play accordingly. There's another service, it's called SSI, or the Speculative Sentiment Index, which is by FXCM. Now, they are not on a web, they don't have a website. The other one is dailyfx.com. You can go and use it. This one is FXCM, it's by tweet. And what happens is, again, they don't have the website, they have the tweet. And then you can see, I just got it earlier this afternoon, for instance. And again, I'm emphasizing with the Euro USD, but you can see they tweet and they tell you whether it's the, in this situation, they say, well, 69% of positions are short. So contrarian for Euro. Again, you have to make your own judgment. I'm just giving you the tools. So there are, again, instruments like this, services like this available. Now, as I mentioned, with the commodities, it's very difficult. It's all about supply and demand. But with the currencies, again, being so large, and again, with having the pairs, it's a little easier to manipulate. Even stock market, sometimes it's easier, but not as easy as, let's say, the currencies. All right, so with that in mind, let's talk about what is the best time to trade Forex. If you recall, it's a 24-hour trading vehicle. So, and we have all the zones around the world, we start from Australia, and from Tokyo, Australia, we go to London and Europe, and then New York. So we constantly have this open area. And then, as you can see, that what happens, you know, when the Sydney starts at 5 p.m. East Coast time, New York time, and then for 2 hours it's by itself. Then Tokyo opens, they overlap. Then Tokyo is alone for an hour, and then it overlaps with London. And basically, then New York, it's at the 3 hours. So in this situation, the most liquid time, but I found out the best time, if you want to do the euro or British pound versus dollar, which is the major currencies, the most liquid is the euro, for instance, for me is when the New York and London overlap. So as you can see, these are the hours when we just shot the map. But if you are gonna do a US and European related, then that's where I would use the 8 a.m. to 12 noon, 11 a.m. New York time. That will be the best time for liquidity. Now, one of the things you also want to know, I mean, I'm not going to do euro, for instance, when it's like an Asian market open, because you want to go where the liquidity is. So, for instance, for myself, when the Australia, when Sydney opens, for instance, I'm going to trade the Aussie dollar. I'm going to trade Japanese yen. I'm not going to do British pound, dollar at that time, because there's always the liquidity question. Usually those traders are sleeping, or it's not, you might do British pound yen, for instance. And so I thought this just for you, for the overlapping, these are the most liquid times, and especially if you're going to be a day trader. Now, if you're doing more of a swing long-term trader, you can be more selective, but still you don't want to pay a large spread, because that spread between bid and ask can move. So you want to make sure you are there in the most liquid times, whether you are closing a position or opening a position. So as you can see, our major pairs are anything with the US dollar. So that's when you have to choose the times of the day that you want to be involved. And then the minor pairs are anything that other than US dollar. So, and then exotic pairs, which are becoming more influential now, is the, you know, like the Euro, Turkish lira, for instance, or the Swedish krona or Norwegian krona, and then Danish krona, or South African rand, or Hong Kong dollar, and like Singapore dollar. Now, Singapore and Hong Kong, they've been pegged to the US dollar, but Singapore is becoming more and more financial center after Hong Kong, what has happened. So that's something that you can basically, you know, look in the future as far as if you want to do some trading. So basically, as I mentioned, if you want to, you have good inclination, sometimes it's not a bad idea to do your trades, for instance, British pound, Japanese yen, when the banks are not as, you know, involved than with the dollars. So they don't see as much activity, for instance. I just want to give you more like euro crosses. These are the euro, yen, pound, and other crosses. So now that we know what times, you know, the best times as far as the activities, but what about the time frame? The time frame is how long you want to hold to your trade. And basically that will all reflect, goes back to your, again, knowing yourself, your personality. So you want to know whether you are going to be an investor, which is more of a longer term, or you're going to be a trader. If as a trader, you really have a short time mentality. You want to doing this more of an income generation, and you're willing to take the risk. You like that volatility because you can manage it. Most of the time, you're more of a chartist, you're a technical analyst rather than just a fundamental, and you're very good at quick decisions, and you can make the decisions. You're not as patient, and basically with that, on the other hand, really time management wise, what happens, especially if you're scalping, you're really glued to your monitor, and that becomes very stressful. So there's a lot of demand on your time. So you have to separate that. You have to understand, again, who you are, and especially when it comes to the Forex with all the movements. And that's how you can decide what time frame you're going to use. So if you're going to be the short-term trader, then that's when you want to do maybe futures. You can do, again, the Forex. If you're more of a long term, then you can do ETFs and stocks, even futures and Forex for long term. So basically, that one, the separation happens. So basically, when we talk about a high time frame, that when I say time frame, you're holding time, and consequently, you will follow as far as your charts or graphs, whether you're using, that's the time frame you're going to use. If you're a high time frame, you're going to look at months, weeks, days, and maybe 4 hour and 1 hour. You will make fewer trades because you're patient. You're looking for really good signals to get in. On the other hand, with low time frames, I mean, for my futures, I do ticks, which is seconds. Or you can do 1 minute charts, 5 minute charts, 15, 30, and perhaps 1 hour if you want. So there's a lot of trading. There's a lot of turnover, and so you really have to be very strong and very resilient. So basically, again, the differentiate, if you're doing scalping, you are going to look at 1 minute and 5 minute charts, and your holding time will be under 30 minutes. I've had, I shared some of my trades with you. I did a trade where I was in it for 6 seconds. By the time I pressed the button, my target was hit. So basically, that's really scalping. But again, I don't do that a lot. It just, if at the right time I get in. So really, scalping can be very stressful. Intraday is 5 minutes, 15 minutes. You're going to be in it for several hours. Sometimes we do our gap trades based on that. The swing trade is basically, I believe, for Forex trading, is very attractive. And that's the 4 hour. And that's what I think the most successful as far as trading success, the most profitable, has been people that they look at the charts on a daily basis. And we will talk about our strategies. Mainly the best success comes from the daily. And then as far as the Forex goes for holding time, confirming that with the 4 hour. And the 4 hour trading seems like the most efficient. I will go down to 1 hour, but anything with like 5 minutes or 10 minutes, 15 minutes, especially if you're doing, look at the technical charts, is not as profitable, and there's a lot of noise. So if it were up to me, I would suggest that, that the 4 hour and 1 hour will be the best, and you can hold on 3 to 6 days. Basically, based on your risk management, you can do, basically managing your risk, you can actually have very profitable trades. Now, position and trade could be, you look at the daily and weekly, and then it goes 5 days to several weeks. It could be several months. So, for instance, we have have had clients and investors, let's say in Europe, that they were thinking of buying real estate. For instance, in the United States, they have a large amount of capital. Well, it's about the timing, right? Do I want to pay the dollar today, or should I use the dollar here, or should I transfer the euro? So then we're talking about hundreds of thousands of dollars. So that becomes a long-term decision whether they want to hold their money there and basically look at the other opportunities using something else in, let's say, in the United States. So those are the things. As far as what we are talking about, I'm looking at more of on a short-term, the day trading, more of a swing trading. And again, the most attractive that I found, if you want to do any type of charts, I would look at the 4 hour daily, 4 hours, and then 1 hour. If so, 30 minutes would be the absolute minimum as far as it. I mean, 5 minutes and 15 minutes, even the tools that we use, they don't work as well. So just a food for thought. So basically, again, more things as far as, in the percentage of the return on your money. So you have to really, micro trader is the second, or the scalper. Talking about that, by the way, so the micro trader nowadays, because of the biggest advantage, one of the best advantages of the Forex trading is because of the leverage that you have and the very low initial investments, very low requirements for the margins. So what happens is it's very easy to get involved. And one of the things they have done to lure you in even more is now you have the mini contract, you have the micro contract. So you can try with a small amount. If you want to try it, you can get in and risk 1/10 of the big lot. Let's say in euros, like 100,000 lot, you can use a $10,000, or you can increase your margin. You don't want to take a lot of risk. You want to be conservative. Then you don't have to go 50 to 100 to 1 or 200 to 1 or 50 to 1. Maybe you want to go 10 to 1. So basically that's one of the ways maybe you can manage learning with a small capital in some of these brokerage. So as you can see that the trend determination, as I mentioned, for very long term is monthly, weekly. For swing trader, we look at the daily, and then I would use the 4-hour and hourly for my confirmations. If I'm the day trader, I look at the hourly. You can look at the 10 minutes, 30 minutes, even 15 minutes. And then the scalping is an actual ticks. So, okay, that in mind, let's dive in and some of the strategies that I've used. Again, I'm trying to go outside the box, and some of the things about with the Forex trading is there's a lot written, but a lot of traders follow kind of similar strategies. So what happens, it becomes a self-fulfilling strategies. So first of all, before I go to anything, since I talked about it, this is from my trade station. You can see these are like a 5 minutes. I just talked about not doing 5 minutes, but this is how my workspace is. If I'm just, what I look at is basically I've said it before, when the trading, I like the confirmation. I like to see the story matches. For instance, if you're looking at stock market, I want to see if there are risk on assets going up. I want to make sure the risk off assets going down. So basically, I'm looking at that. So the same thing here, I'm looking at the Euro USD, and I'm going to see how is it related to British pound? How is that British pound is related to dollar? So I have, I'm the big advocate of all these indicators. I just wanted to give you a sample what's out there. There's just so many indicators out there. These are the, this is the moving averages ribbon. And basically we look at the expansions and the contractions on ribbons. But this is not what we're going to study. I just want to show you a sample of what is out there for 5 minutes. I'm going to emphasize more on a daily and the 4-hour. So the reason I want to show this, we saw this last week, there's we constantly talk about the dollar index, and what dollar index, I just want to clarify that. What that means is, again, we have a pair. So it's the dollar against other currencies. So Euro, USD. So it's the Euro and the dollar. Now, dollar index is like this dollar against a basket of different currencies. So what that basket is tells us the strength, which one is stronger. So if the dollar is going down, this basket is going to go up. So when you see this, what that tells us that the euro is 57.6% of that index. So what that means is if euro is getting weaker, that means the dollar index is getting stronger. So we do have euro USD, they go against each other, but then the dollar index, it has a big influence comes from euro, but you could have maybe Japanese yen going up and the UK, which is the 12%, could go up. So what happens, these can go up and this can go down. So the dollar might not depreciate as much as if it were against the euro, or the vice versa. So, but this is what the dollar index, when you see that every week when we look at the charts, this is what it means. This is the dollar index, which is against these currencies. So with that in mind, if you recall, every Saturday we look at the Bollinger Bands and we look at where the dollar had been. And this is the basket of when we talk about the dollar index is you can see we hit the upper channel of the Bollinger Band, and guess what? We have, this is as of today's closing, and you can see we are right on the 100-day moving average. We hit the Bollinger Band and we have bounced back. We are right now, we are sitting on that support, although still stochastics is embedded. One quick question about these two, which is basically it's related to the Bollinger Bands. When you see the Bollinger Band percentage, what that means is when on the upside, when we go outside the Bollinger Band, that means it goes over 100%. So visually, I can see when it gets to yellow, if I cannot see it there, I see it just from this chart, knowing that I've gone beyond my upper edge of Bollinger Band. On the other hand, when I see on the lower end, which is the 0, that means on the lower end, I had gone outside the Bollinger Band. And as you know, the idea is you do not stay outside the Bollinger Bands more than 5 bars. So this will gives me heads up. So when there's times like this, when we stay outside 1, 2, 3, 4, you know, the odds are very, very high that we're going to come back inside. So visually, I can see this. It turns yellow, and as soon as it turns red, that means that, and this is based on closing, by the way, closing price, then that means we are inside Bollinger Band. We also have this, the Bollinger Band. This is the width or the breadth. So what the bandwidth. So basically what this dotted line is, we have this red line and the dotted line. It just shows in the past 50 days, for instance, how wide this band has been relative to itself over time. So this is the widest we had been. So when you see this yellow line, which is today's closing, and this is the past, so this is where we are. If we are getting very close to the top line, that means the Bollinger Band is wide open. It is as wide as it has been in the past 50 days. So basically it gives us heads up that, you know, the volatility has really increased. Now, when we go close to that red band, that means there's a very low volatility, which we can see right here. You could see this was almost like a bottleneck. So the volatility was very low. So we were sitting on the bottom of this. So that meant like maybe there's a squeeze, something is going to happen. And as you could see, all of a sudden, as you can see, the expansion happened and the volatility expanded. And that's how we started moving with a nice trend. So based on that, let's look at euro. So this is actually euro futures. Now, they look completely opposite. The only thing is the same is the volatility band is the same. Both of them follow the same thing. So here, the other one we were embedded on the sell side. We are embedded on the buy side. So we still embedded. Now, rather than hitting the support like dollar, now we're hitting our resistance at 100-day. So we hit the upper Bollinger Band and we came back down. So right now, this is the time we have to make a decision. Basically, we're looking at the resistance, we're looking at the Bollinger Bands, we're looking at the candlesticks, which is indecision. So what is going to be next? And we looked at the sentiment. Is this a good time? Maybe go back to buy the dollar, or do we want to short maybe the euro? So this is on a daily basis. So this is the decision time. So that's why maybe we can go look at other indicators. So in Forex, what you want to do, you don't want to have 1,000 indicators, but if you can have 2 or 3 really good ones, which they confirm each other, then that will be the best thing to do. So right now, again, we can see the doji here. It confirms that something is happening. We do have the 100-day moving average. We still not overbought yet. So that's one thing, but the volatility is high. So with that in mind, we look at some other strategies. So one of them is we have used, which is a TTM, it's a linear regression channel. Now, what we look at, I look at the 30-day and this is a 100-day. So we've had a nice move from the lower edge of the second standard deviation. We've come up. Now, here is the indecision. We are in the 1 standard deviation. Are we gonna, is there a resting time? What is gonna happen with euro? Is there a fundamental story with the vaccination euro? And basically, this is telling us that there is a definite indecision. We are more to the, you know, overbought side of things. This is the 100 days. So the trend is down on the longer term, but on the shorter term, the trend is up. So this is, again, there's a challenge going on. So that's on a daily. But also I look at, I just, again, this is a picture of my workstation. So as you can see, I look at a monthly, where does euro stands on a monthly basis? I look at the, on a weekly basis where we are. We just looked at the daily. Then I look at the 240 day, I mean, 240 minute. You can see we are right at the mean. We look at the 60 minutes and I look at 30 minutes if I need to, but like 60 minutes is close to the upper edge. But, you know, 240 minutes, we're still within the mean. So basically we are not getting all the complete sell signal. So the second thing that a lot of people use is like the third one, that's the Fibonacci. Fibonacci is a very, has a large following in the Forex. So what happens is, again, it could be the self-fulfilling prophecy. So when I look at the daily, now we look at, we've talked about the area between 38.2 and 61.8 is a very major area for the trend change, if there is any, and 50 to 61.8, we call it ambush zone. Usually indecisions happen. As you can see, we are right at 61.8, for instance, on euro. Again, another indecision. So we don't have the confirmation of the sell, but we do have the resistance. So we are looking at that, and basically what happens, as I mentioned, this is something that a lot of traders follow, so they respect these numbers. One of the things I have to also mention, that the major currencies, which is involved dollar, is a very trending, has a trending pattern. So once they start, they continue. They don't do whipsaw, you know, they don't go range bound. Basically any major currencies and also commodity currencies, which I haven't talked much. The commodity currencies are currencies such as Canadian dollar, which is very much like oil related, Aussie dollar, which is a natural resources, New Zealand dollar. So mainly the Aussie dollar and Canadian dollar are more of a commodity oriented. And gold, for instance, is a trending. So what I mean by that is once the trend starts, they usually like to continue. The same thing with Euro USD. When the trend starts, they usually till they stop. And then once the trend reverses, then the trend will continue the other way. So it is kind of a predictable pattern. And that's what the Fibonacci is, a very good tool that everyone uses. Again, it could be because of it's more of a self-fulfilling prophecy sometimes in these technical tools. And that's why I will introduce a couple of things that I use that is like kind of outside the box I try. And also, if you refer back to 2 weeks ago in our Fibonacci class, they very much respect the extensions. Like for instance, 127.2 is very much in play for the projection. 161.8 is a great projection tool. And also it goes hand in hand with the Elliott wave that we won't get into it now, but it is similar using the same kind of things like Fibonacci that does the numbers patterns. So that was what we looked at. That was the daily, and now we can look at Fibonacci on the 240 minutes, and you can see that how we go from the low to the high, and now we've had the support at 27.6, and then we'll see if this will hold. So this is more of a swing trade if you want to do. Would you think there's a big resistance? If you break this down, well, then you will have your targets in order if you want to short the euro Euro USD. So we still don't have the 100% confirmation. So that one tool that I really like to use with the Euro USD and the currencies is the Ichimoku. Now, we've had a class on Ichimoku, so I'm not going to go too much into details with that. But there's a couple of interesting things with the currencies, with the with Forex. It happens in analyzing with Ichimoku. Now, two things. Number one, you can see one of the things, if you recall, when we are below these are the clouds. So let's ignore these. These are the standard line and the trend line. These are the clouds. So we usually favor longs when we are above the cloud and shorts when we are below the cloud. So once we broke below the cloud, this would have been a good short. Here, what happened was we are below the cloud. So the long, we really need to have a big confirmation. We have to have a lot of conviction with other indicators to go long. Now, at this time, what we are with Ichimoku, basically Ichimoku tells us that we are inside the cloud. When we are inside the cloud, that's another indecision. So basically we are inside the cloud. We have these dojis. This basically tells us that we are neutral. We don't know what's going to happen at this moment on a daily basis. One of the things I found with Ichimoku, when you have these flat lines on the clouds, they make a very good support or resistance. So you can draw a line right here, for instance, because this is a close. They usually become, as I mentioned, either resistance or they become or a support. In this case, is a resistance. So like here, you can see it nicely goes up. But when they are flat, this was a nice support, for instance. Here, this is a resistance, this is resistance. The reason I mentioned these could be more your target. For instance, if you got in here, we got a confirmation of, this is the low of the high bar, this is the low candlestick, and we close above the high of this. That was a confirmation maybe to go long. Then this could be a good place to take profits. So what we do, we like to combine that Ichimoku, I found out, with using the ADX, which is the directional index. It tells us the strength of the trend. So I have this yellow line is the strength of the trend. So when we are above the 20, that means it doesn't tell us the direction. It just tells us that the trend is strong enough. If you want to remember, the currencies are trending vehicle, is enough strength to get in, and it's not going to be really as choppy or range bound. So that means there's a strength. So we are above the 20. There's other two things there, the DMI plus and DMI minus. So what DMI means, if it's blue, that means that the buyers have more momentum, they're in control. That the red means it's the sellers. So when the blue crosses the red and stays above, that means you have the buyers in control. So that means the bias is to the long side. So when I have something like this, you can see we cross the red right here, and the trend strength is above 20. That tells us this cross, that means the buyers have control with enough momentum. So now when we look at this, especially when we close above the, in this case, above this trend line, that meant that, you know, there is a good conviction with the combination of the candlesticks, combination of this buying, and basically this could continue. So again, you could have gone down to like the 240 minutes on this, but this is a good way of working the two indicators together to get the confirmation. Now, right now, as you can see now, the trend is still strong, but the buying is coming down, but we don't have any confirmation since we're selling. So if this dies down and if this crosses, then that's the confirmation. Right now, the way I see it is more of a profit target, or maybe reducing your position at this time. This is a picture of, again, my workspace. So I have a daily, I have weekly, you can see the monthly, and then I have 10 minutes, 30 minutes, and 60 minutes. You can see we are inside the cloud on the 60 minutes, but above the cloud on 10 minutes. But this is the main one which we look at as far as the Ichimoku goes. One of my other favorite plays is the squeeze play with the TTM. Now, what that means is this is based on daily again. As you can see, we're using the TTM lines as well as the squeeze. So now again, the bars, remember we have 1, 2, 3, 4, 5, 6, 7. Usually the bars are good for about 8 to 10. So we are getting pretty close to our target. We're also, again, beside the path, how we are getting closer to our upper edge of our linear regression, but also we look at these are the TTM. So we still blue. So we, in order to get a sell signal, this has to turn to red. So we don't have that. The waves are up. So far everything is, you know, still there's no shorting signal, selling, but maybe lighten up again. So this squeeze play is very attractive. You can use it on a 60 minutes, I mean on a 4 hour. So you can see on a 4 hour, we have lost the momentum now, and we actually last 4 hours in last 2 days or so, we're losing the strength. So even though the trend is up, we are losing our momentum. The wave is still up, but this is our 4 hour. Another good thing that we use, again, we have, we can take advantage of it, is the expected move on the futures. Again, this is from Thinkorswim. We can look at it on an expected move. The futures is 6E. Guess what happened? You saw all that indecision with all the things that we saw, from the Bollinger Bands to we looked at Ichimoku, we look at the TTM or the LRC, and guess what? On a weekly basis, yesterday, we hit the expected move, doji bar indecision, and today we are just closed right under. So this is how you can build your own, basically your own technical tools based on what you have, and have a pretty profitable, at least swing trading strategies. So again, this is something that probably most other traders do not use. Now, there was question, one thing is there's a lot of, you know, with Forex trading, there's a lot of support and resistance respect. So a lot of in Forex trading, they do look at the resistance lines and the support lines and the trend lines. So I look at the support and resistance. You've seen me, especially in the futures. I do have actually zones. But the thing is, something about the trend lines, they can become very subjective. So I want to share this with you. This is, again, the Euro USD. This is the daily. Now, this is from TradeStation. And the TradeStation does have its automated trend lines. That means you just insert the technology and it comes with all the trend lines. If I would have showed you the weekly, you would think that this is something, it's like Leonardo da Vinci is creating something, because there's just so many lines. So you can see there's just a lot of subjective lines, and this is, you can see how many lines it has created for trends, for support and resistance. It can be helpful, but can be overwhelming. So you can do that. For me, the trend lines, I want to have a minimum of 3 points. I do not like the 2 points, for instance. That doesn't give me a lot of comfort, even though in this case, again, this is after facts because this was not there, but now it's becoming support. But I rather have multiple points, and that becomes the strongest. Now, the trend lines are easy to do, so you can do it on your own. You can go on Finviz. Finviz draws it for you. So because they have access in all those services, I don't really do a lot, especially in our weekly presentations. But it is respectable. It is in the Forex, especially, again, the support and resistance. The last thing as far as this section goes is basically the options. You can have options on the futures on euro. So this is another way of you looking at what is happening with the expirations. And this is all the, you can see the expected moves, you can see the implied volatility, you even have the sizzle index. So this is something, again, is under the hood. You can see what is the market what is market thoughts as far as the uh, basically of all the options on the futures on the euro. Now let's talk about best brokers. As I mentioned, so we have this rating. This is of 2021. We talked about IG. It is the most respected. And one of the things you have to remember for I've witnessed, I've worked with a few Forex traders. I used to do with TradeStation, and then they moved to Oenda. So Oenda is one of them, one of the companies that you can work with. It's a very easy platform if you have Oenda. But there's three things. You want to make sure the broker that you work with is very liquid. I mean, there's a clearinghouse, but in my time, I think I've seen at least 3 of these Forex brokers have gone out of business. They've blown their accounts, and not good management or whatever it was, they made a lot of risk. So that's when you want to make sure. And some company like IG now, again, they're present in the United States. So there's IG US. Now, TD Ameritrade has, we saw the Thinkorswim, and also there's Oenda. So one of the things is you want to make sure they're strong. The second thing is you want to make sure the spreads are attractive, because they say there's no commission, so that's attractiveness about Forex, but then you pay the spread between bid and ask. So you want to make sure, like here, you can compare what is the spread for the exact same thing. The third thing is, it's very important, and is the customer service. So, and you want to have a 24-hour, because you don't know, you could be up 2 in the morning and decided, you just have this intuition that the things is going to work out. Let's say I want to trade British pound, for instance. Now, talking about that, one of the things I did not mention is make sure whatever you do with your trading is not based on feelings. I feel good about this. No, you want to make sure, that's the reason we went over strategies. You want to have a sound discipline. You want to make sure the reasons that you're going in. So you have to have a sound plan. So don't say, well, I just have a gut feeling it's going to go up. Well, if you've been doing it for many years, then that might be something. But if it's something you just feel for it, it's not a good idea. And that's the time that maybe you get into trade and you say, oh moment, you want to have a good customer service. So something like TD Ameritrade, even though they're very good, I don't know how great they are as far as a customer service. I don't deal with them. I do have access, to their Forex, but I don't trade with them. I trade with a couple of other firms. I mentioned Oenda, Tastyworks has also Forex, but I thought these are the 3 top ones based on the rating. So you can see these 3, forex.com, you can see the spreads, but also you can see the minimums. You can see that's one of the biggest advantages for the Forex is such a small amount of deposit required. So anyway, just interest of time, I'll just move on. So the last part, I just want to share some of the secrets of successful traders in any avenue of your trading vehicle. Again, make sure once you approach this as a business, this is not going to be a hobby. It's great to have trivia and information and all that, but take it seriously. Even if you do it 2 hours a day or 1 hour a day, again, this is your time, this is your hard-earned money. So approach it that way. Have a business plan, have a trading plan, have trading strategies. Now, I mentioned open to receive. So when you go in, you're approaching this as a business. but go in thinking that it's going to be a profitable business. Don't be self-defeated the minute you start. Oh, I don't know enough. I don't know if I should do this. No, just go in very positive, but not as false sense of confidence. Just you have to really pay your dues, your tuition, but be open, be deserving. If the profit comes, it's you deserve it. So um, be calm and control. Um, this is very important, and don't think that net worth translates to self worth. Either way, if in the same thing, if you're losing, it doesn't have any reflection on your personality. I just mentioned trading is not about feeling. Um, the traders are very serious. Again, they and I know obviously most of you is that the the trading, you just start this love affair and there's like a passion involved. So it's the learning, it's the challenge, it's the actually the process which makes it's not even the dollar signs, it's actually the process that it makes it enjoyable. And make sure that risk management is the protecting your capital. The good traders are patient and they know when to be on the sideline, when to say no. Uh, no opinions. I mean, in my house, there is no TV. TV is on a mute. I just look at it basically on the Bloomberg, for instance. The probabilities are very important. They are good at loss and risk management. They respect the markets. They're accountable. And I mentioned, in my opinion, losses are tuition. And I call them a loan to the market. So even if you lost that money temporarily, that money is going to come back to you. You're going to get it back with some interest the market owes you. So that's what you work at. And that's the beauty of all these markets that we are involved. It's a continuous, it's not a process of you get a one big contract and then you're done. You got to start all over. In business, for instance, you have a big sale. No, this one is a continuous business and you can always make up for it. They believe process, again, process like sports, like soccer. They really, it's not about scoring 10 goals. It's about enjoyment of that an hour and a half on the field that you actually enjoy being there. And it's more important than outcome. They focus on trading well, not counting how much money they have made. The exit strategy is as important, if not more important than entering, which is very important. They don't make emotional decisions when they're trading, small profits or large losses. It is something that they have, again, they have a plan, they follow. No expectations when entering the trade. It's not like I'm already counting on that jet I'm gonna buy, when I got into this trade, or I'm gonna be in that island. No, that we take one thing at a time. Confident, disciplined, and patient again, not afraid because they're not reckless, and accept and understand the risk, and very much monitor self. Always is self-improvement. We always learn something new. And the last but not least, that again, losing a trade is not being a loser. So that's very important to keep in mind. So with that in mind, I hope it was helpful. I tried to make it short, but unfortunately, again, we went over an hour. So I thank you so much. I hope, again, this was informative. Again, there's a lot of material, so it's very tough to squeeze everything in 1 hour. Basically, these are like workshops. It takes weeks and months to go through all this, but I just want to share some of the highlights, some of the things that have worked for me. With that in mind, I think we can stop the recording and open for the questions. Thanks, John.